While I'm Jagender Rana, the product of the day is mandatory employee insurance in India. Mandatory employee insurance in India. On April 15th, 2020, the government took a historic step towards its goal to get the entire Indian population insured. So, as a part of Order number 40 3 of 2020 DMA, issued as consolidated revised guidelines by the Ministry of Home Affairs, it was made mandatory for every employer who continues their business operations post COVID-19 to provide medical insurance to their employees. So, health insurance for salaried employees will now be mandatory for the employers, along with a process for social distancing in offices, establishments, and factories. With a view to ensuring safety in offices and workplaces, employers on the best effort basis should ensure that Arogya Setu is installed by all employees having compatible mobile phones. All industrial and commercial establishments, workplaces, offices, etc. shall put in place arrangements for the implementation of standard operating procedure before starting their functioning. To execute the guidelines on the grassroots level, the Insurance Regulatory and Development Authority of India issued guidelines asking every standalone and general health insurer to provide comprehensive medical insurance for employees in India to enable the listed businesses, employers, establishments to comply with the directives given by the Government of India. It also highlighted that the businesses should provide medical insurance policies not just in the present situation but even after the COVID situation subsides. So, although there is no minimum sum insured mentioned in the guidelines, it was advised to go for a sum insured that truly helps employees in times of emergency. So, generally, it's a common industry practice to offer at least 3 lakhs coverage to every employee. If the organization is based in a tier 1 city where the cost of medical treatment is high, in tier 1 city, a 3 lakh coverage might cover rupees 3,000 room rent per day, co-pay, free health checkup, no claim bonus, pre and post hospitalization coverage, daycare treatment, and a lot of other features. So, in a tier 2 city, you can expect to witness a rise in the number and scope of features. So, for startups and SMEs that are preparing for the great return of their employees, gone is the time when X terms and conditions used to answer. When must an employer provide health insurance? The time to get their employees' health covered is now. But is mandatory employee insurance in India enough to give the employees the mental security to come back to the workplace? That's not. So, for a business, it is important to know to now go beyond mandatory employees insurance in India, and not just for their employees' productivity, but also the impact that it will have on their bottom lines. Now, while on one hand, one part of the question is it mandatory for employers to provide health insurance in India? It has been answered. The key question remains how to offer a comprehensive healthcare benefit that will truly be helpful for the employees. So startups as a way to answer the need for an all-inclusive healthcare plan have started cutting their working capital budgets slim by partnering with multiple vendors across different physical and mental healthcare segments. This is leaving them with not just low working capital but also a limited budget for innovation. However, there is a solution to this nationwide problem, partnering with a startup focused employee healthcare firm. So, the importance of mandatory employee insurance in India is all inclusive healthcare for employees, and at the same time, the financial limitations of the employees are also there. So, keeping both aspects as a priority, there are several schemes which can be selected by the employers for their employees. And the most important aspect is that this employer-employee insurance or group health insurance plan can provide timely financial assistance to employees during health emergencies. It can also help retain the latent pool in a business establishments and generate goodwill for the brand. The people first organizations must ensure their workforce with such a cover, as it offers numerous benefits for both the employers and the employees. So what is an employer-employee insurance scheme? An employer-employee scheme is a type of health cover that employer is or employers buy for their employees. Such a policy serves as a valuable employee benefit by providing financial security in case of medical emergencies. This initiative can enable companies to not only retain existing employees but attract new talent for the business growth. So an employer-employee insurance policy can financially protect not just your team but also their covered family members. Depending on the policy, the coverage can include accident-related injuries, medical emergencies, hospitalization cost, and other covered expenses. The employer-employee insurance is a way of offering health-related financial cushioning for your team. The employer-employee relationship scheme or insurance scheme works as a comprehensive health cover for every covered member of an organization sponsored by the employer. Employers can purchase a group medical cover, that is GMC, or a group personal accident, that is GPA cover for their workforce. The GPA policy can also be group health insurance add-on. Typically, the employer pays the premium for every covered employee under the policy. The objective of an employer-employee insurance policy is to offer financial help to your team members in case of medical issues. Thus, it works as an employee benefit offered by the company. Now, the question is, what is covered under the scheme? Because a group medical cover serves as a master or health or medical insurance policy for all members of a business establishment. This coverage can be extended to the family members of an employee as well. A group personal accident cover financially protects the workforce of an organization against accident-related injuries and death. For the eligibility of employer-employee insurance policy, the criteria for an employer-employee insurance policy is a company or corporation or a sole proprietorship or partnership firm, and private and public companies are eligible to purchase policies for their employees. An employer must have at least 5 salaried employees working for them. The shareholding strength of an employee in an organization, including all their family members, can't be above 51%. There must be a transactional service and a salaried relationship between the employee and employer, respectively. So, benefits of employer-employee insurance for employees are there because the coverage can vary depending on whether it's a group medical cover, group personal accident cover, and GMC with GP add-on. So as far as medical cover is concerned, employees covered under the policy get insurance coverage for medical emergencies, illnesses, etc. as per the terms and conditions. In certain situations, the coverage under employer-employee insurance may extend to the family members of an employee as well. This can include dependent parents, children, and a spouse based on the terms of the policy. Accident cover is also there because employees covered under the GPA policy receives financial protection against injuries or death due to an accident. In case of accidental death, the nominated family members of the employees receives the compensation amount. Then the tax benefit is there. If employees contributes toward the premium, they get tax benefit as per the Section 80C of the Income Tax Act 1961 for the amount paid by them. Cashless services should be there. A covered employee can receive cashless services at any of the hospitals under the insurer's hospital network. So a cashless service allows the policyholders to attain health care at a medical facility without having to pay cash upfront, as the bill is settled between the insurer and the hospital. So there are benefits of employer-employee insurance for employers also, because employers can financially secure employees against medical uncertainties by offering insurance coverage. It can help improve the employer-employee relationship, resulting in higher workforce motivation. Secondly, a health cover can make employees feel that they are taken care of, hence employees are less likely to think about switching to a different company. As a result, you can reduce the attrition rate of your organization. So attracting talent means an employer can highlight employee health insurance as a key benefit of working at an organization. Many candidates look for good medical coverage along with other factors while joining a company. Hence it can help to attract talented employees. Employee productivity is also ensured because top employee health insurance policies provide preventive health care support initiatives such as fitness taking applications, discounts on medicines, etc. may come as a part of policy. These measures can help improve the lifestyle of your employee, making them more productive in the long run. Then an employer can attain tax exemption on the premium paid for an employer-employee policy. The premium can be declared as a business expense. So the tax benefit for an employer is there because as per Section 17(3) of the Income Tax Act, the premiums paid by an employer for employees' health insurance comes under profit in lieu of salary. Hence, the employer can show that premium amount as a business expense to obtain tax benefits. In simple words, annual premiums of employer-employee policies are general business expenses, hence deductible from the payable tax. If an employee pays any part of the premium, they can also avail of tax exemption as per the Income Tax Act 1961 of India. Similarly, if there are any top-up plans opted for by an employee, the paid monthly premium will also fetch tax benefit in the Income Tax Act. So there are types of arrangements in the employer-employee insurance policies. There are two major kinds of arrangements. First one is proposed by an employer for an employee. The following are the key factors of the first kind of employer-employee insurance cover. There are only general factors, exact details can vary. The policy is assigned to the employee, that is policyholder, as per the employer-employee agreement. The organization holds the right to impose restrictions and prevent an employee from misusing the policy. And after the expiry of the group plan, the employee can convert the group policy to an individual policy as per the applicable terms and conditions. And in case of employees customize the policy, the following are the key factors associated with the second type of employer-employee issues cover. The employer proposes the basic plans to employees with the freedom to customize. The employees can customize the insurance policy based on their personal requirements and preferences. The employee has to pay for the additional coverage. So this is the policy which is required for the employers mandatorily. Thank you very much.